After the recent fall, everyone is asking one question: what happens to the market this week? Over the last few sessions, the Indian equity market has come under pressure, driven largely by global factors rather than any single domestic trigger. At this point, the most important event influencing market sentiments is US Federal Reserve policy outlook. Global investors are closely watching how the Fed assesses inflation, economic growth, and the interest rate. The Federal Reserve has clearly communicated that future policy decisions will remain data dependent. This means inflation numbers, employment data, and economic growth indicators will determine whether interest rates stay elevated for longer. When global interest rates remain high, capital tends to move towards safer assets such as US bonds and the dollar. This often results in foreign institutional investors in reducing exposure to emerging markets, including India. From an investor perspective, this phase is more about risk management than aggressive positioning. Short-term traders need to remain disciplined, while long-term trade investors should focus on fundamental rather than short-term noise. In summary, the Indian market this week is reacting to global monetary policy expectations, currency movements, and foreign investor behavior. Clearer direction is likely to emerge only after more global data becomes available.